Let's welcome on board Angan Guha, the CEO at Birlasoft, joining in on the show right now. Angan, great to have you on the show. You managed to report a bounce back in Q4, much unlike the trend from some of the large cap IT majors. But tell me, going forward, given the impact of Invacare, what's the outlook for FY24?
So first of all, thank you for having me on the show. We don't give an outlook for the year, really. I mean, we don't give a guidance, but suffice to say that we had a great quarter. Outside of Invacare, we were able to deliver 3% sequential growth, which, I think was a very strong execution-led quarter. Going forward, we will continue to focus on execution and see how the future quarters look like. So right now, it's all about execution going forward.
You delivered 16% revenue growth in FY23. Will it at least be a double digit in FY24, and is 3% quarterly run rate then possible?
So, Aisha, it's a little hard to say in terms of how the markets are going to move. As you know, there's a huge macroeconomic headwind that we are facing, and it is really difficult to predict the future. But for now, I can only tell you that we are focused on the business. We are making our investments in capabilities in the verticals that we have called out, and I'm confident that we will continue to execute well. Now, whether it will be a double-digit growth or not, only time will tell, but we are taking one quarter at a time.
What you're telling us is that right now, given that the IT industry is going through a cyclical downturn, you don't see any large problem whatsoever, at least at Birlasoft.
So, Nikunj, as I see today, right, I don't think we see any problems with any of our accounts or clients at this point in time. But that is, again, what we see today. Again, like I was saying, it's hard to predict tomorrow. But today, the accounts that we serve, the clients that we serve, are pretty strong.
Isn't that, while it's quite commendable, but isn't that extraordinary that your peers, whether it is big or small, tiny or micro, all of them are giving us a different commentary? They're feeling the heat.
Yeah, look, Nikunj, even we are seeing the market's headwind. It's not that we are not seeing the headwind. The headwind is there. The question then becomes the kind of clients that you serve and how your clients' spending pattern looks like going forward. From our perspective, we are a relatively small business, roughly about $600 million a year. We had a good quarter, and we will be focused on execution. And we will take one quarter at a time because it's hard to predict the future, like I said.
Just wanted to understand a little bit further then, Angan. When it comes to Invacare, is the issue then fully settled, or you think there could be some more adjustments on account of that?
No, Aisha, we have completely provided for everything in Invacare. As you know, last quarter, we almost provided about $19 million, about 153 crores. And that's the provision that we have taken, and that's our final provision. There are no more surprises. We've reached a settlement with Invacare, as we have declared to the stock exchanges. So that is what it is right now.
At a time when the industry per se is going through a cyclical downturn, what happens to the future business? Could that come under pressure because the competitive intensity will increase? Suddenly, medium-sized companies and large-sized companies will start reconsidering the deals, because right now it is a buyer's market, not a seller's market.
Yeah, so in many ways, we are seeing two or three different things, Nikunj. One is clearly there is a pricing pressure in the market because, like you said, there are headwinds, and our clients are facing the headwinds as well. But second, we are also seeing the deals from more transformation deals to cost takeout deals. So the deals are happening. In fact, our pipeline is only improving, and our pipeline probably has been the highest it's ever been. The question is whether the clients take decisions or the decisions get pushed out. So deals are happening. The issue is, how quickly can we convert those deals into deal wins?
How do you see FY24 then being different from FY23? A simple and a point-blank question.
It will be different. It will absolutely be different. I think FY24 will be very different than FY23 because of the headwinds that we see. And there will be pressure both in terms of revenue growth as well as margin uptick for sure.
Okay, can you define that for us?
Sorry, I couldn't hear
No,
that question. Can you repeat that question?
Can you define what is the meaning of headwinds? Maybe in a numeric number, or maybe giving an example so that we can understand it.
Yeah. So, Nikunj, if you look at the different sectors that we serve, so let's take financial services. You're seeing what is happening in the financial services institutions globally, where there is a pressure in terms of their balance sheet as well. And as a result, from all the discretionary spend that was happening earlier, now the spend is more going towards a cost takeout. If you look at the manufacturing companies, though they are investing continuously in their business, but their revenue growth is under pressure. So in many ways, various industries are facing various pressures at this point in time, and that will ultimately have a big concern in terms of how they spend on IT. So we'll have to wait and watch how things shape up. And which is why I keep saying we will always take one quarter at a time.
So let's talk about the current quarter. And right now, what we understand here is that US regional banks are going through intense pressure. You've stated in the past, when I looked at your previous comments, which has been shared by various brokerages, that you don't have a direct exposure per se to a regional bank. But what are the chances that, given that there is a shakeout which is happening, directly, indirectly, your business could get impacted with a lag effect, something which you don't know today, but it could hit you rather?
And it is very possible, Nikunj, because first of all, we don't directly serve any mid-tier bank in the US. We serve some clients related to payments, brokerages, clients who are big in the housing market, etc. Now, there could be a lag effect based on how the banking sector moves. But my view is, our financial services business is way too small. It's roughly about, give or take, 130 million out of the 600 million. Now, if you compare it to our larger peers who've got billions of dollars of exposure to the financial services market, our business is way too small. So, in fact, quite contrary, I'm very bullish on the financial services market. Given our exposure to that market, our financial services business will continue to grow.
I wanted to also understand a little more perspective in terms of the margin exit rate, what the numbers could be like. For the end of FY24, the guidance is about 15 to 16%. Are you on track?
Yeah, I think we should be on track on that one. From a margin perspective, as you know, for the immediate quarter, we will still have to serve Invacare till the end of May. And after May, of course, we exit out of the Invacare contract, which will give us a margin uplift. So I can't really give you an exact guidance for the quarter, but suffice to say, by the time we exit this financial year, I'm pretty confident that by 4Q FY24, we should be in that 16% EBITDA level.
Okay, appreciate your time. Thank you for joining in and giving us more clarity on the quarterly earnings.